Well, I think we're ready to get started for the deep dive this morning. So I want to say welcome to everybody that's tuning in, joining this morning. We like to start the week talking about some of the most important things in the real estate market. We're going to do that this morning. Talk about mortgage rates and certainly the volatility that we've seen over the last few weeks, and sort of talk about what we do know and what we don't know, so that you have the best information for the clients that you serve. So let us know, as always, where you are watching from this morning. The fun thing about the deep dive, we go live and get to see people from all over the country that join and start their week this way. And hopefully you had a great Easter weekend and getting the week started here. And we'll talk about mortgage rates and everything going on here. So if I can get my comments up here, I'll figure that out, and we'll get going. But hopefully you are in a place that you sort of seen what's going on with mortgage rates. I don't know, maybe have questions, maybe say, hey, I get it. I don't think this is the market right now where I'm trying to say anybody that maybe is an agent should become an expert. I think this is the market to have a great partner in the mortgage business that you can trust and sort of lock arms with and go forward. But let's sort of start this and kick this time off talking about what's going on relative to rates right now. There's so many things happening, so many things moving. We don't have a crystal ball. Certainly, nobody does on what's ahead. But the bottom line is that there's volatile, but I think there's hope ahead, and I'll kind of uncover that and share that with you over the next few minutes during this time. And maybe it's something too that you want to share with folks. If you're a KCM member, you can grab all of these slides inside of KCM and use them in a listing presentation, a buyer presentation, or maybe just even with somebody that you're sitting down talking with, to say, hey, here's what's happening, in the market right now. But I'll kind of start off here. Mortgage News Daily CEO said there are two ways to look at where bonds are trading today. This is either the end of the worst week for the 10-year yield since 1981, or the end of a fairly average 2 weeks that fit right in the trend of the past 18 months. So that was from about a week and a half ago or so. Certainly been a volatile several weeks, with a lot of things shifting, with tariffs, with sort of uncertainty in what's ahead. And we saw things, 30-year fixed mortgage rate jump up above 7 right now. A little bit under 7. I looked this morning, 6.87% on the average 30-year fixed, according to Mortgage News Daily here. But the bottom line is we saw stability in March, and then have had volatility in April. Today, the 21st, maybe 2/3 of the way through this month, seeing a volatile mortgage market. Want to see that settle down. And to that, I said there, as we started off, there are a lot of things we don't know. There are some things that we do know. And in a time like this, we have to focus on the things we can control or do know versus the things that we don't. Jerome Powell said this. He said, as a great Chicagoan Ferris Bueller once noted, life moves pretty fast. And that certainly is true. So for the time being, we are well positioned to wait for greater clarity. So in a time where things are shifting, uncertainty, saying, like, we're going to wait for more clarity. And I do think there are some signs that we can point to say things will become more clear. And I'll show you those in just a minute. But in a time of unclarity, what do? You then go with what do you know? And I'm going to give you 4 things right now that we know, and we can say, okay, this is having an impact on mortgage rates. Again, don't have a crystal ball to say what's ahead. I do think we have some pretty good indications from forecasters of where their consensus is of what's ahead. But I think there are a lot of people right now, my estimation is, that are sort of hesitant to move forward. Maybe even if you're working with people like that right now, if you're feeling that people are hesitant to move forward, it's because of all of this, waiting for greater clarity. I do believe that, and I've said it many times, that then positions a buy opportunity in the market, right? When people aren't willing or hesitant to move forward, but there's opportunities. So what are the 4 things we know? First thing that we know is that inflation is proving to be stubborn. So you go back, this is a look all the way back to the beginning of 2020, kind of inflation rises up, peaks sometime in the middle around 2022. It has come down, but hasn't come down to the 2% sort of marker the Fed would like to see. It's kind of hanging out there, 2.678, wherever that number may be, month over month, year over year, and not kind of getting down where they want it to be. Okay, that has an impact on mortgage rates, and we're going to continue to watch that and stay connected, obviously, to KCM. And we'll bring that information to you, but inflation kind of hanging out a little bit higher than where the Fed would like for it to be. Second, what do we know? Unemployment remains steady, just over 4%. And you can see this goes all the way again back to the beginning of 2020. Unemployment spikes up during the pandemic, has come down, still fairly good, unemployment scenario. We always say, 4% of the people don't have a job. That means 96% of the people do have a job, can buy a home. But those are the things that we're looking at. Okay, is inflation going to kick back up? And that's the big question, with tariffs. Is there going to be an impact if the economy slows down with unemployment? Those are things that we want to continue to watch. But we can see both of those have sort of remained level over the last several months, last couple of years, as we've gone along. So what does that ultimately mean? I think with the uncertainty right now, the probability that the Fed would take action has, kind of hovered, around 3 or 4 rate cuts this year. You see this right here from the CME Group. Our team does such a good job of grabbing this information so you have it. But the CME Group, what they do is they look at what are the Wall Street odds right now of Fed rate cuts. Now, always remember, the Federal Reserve does not control mortgage rates. They can only hope to influence it. Okay, so the Fed comes in and says, hey, we're going to cut rates when they start to see, if they see the economy sort of taking off, they're not going to cut rates. If they see the economy sort of slowing down, they want to use this as sort of a lever they have to maybe keep things going forward. You see the consensus here, the green bars, the majority say somewhere between 3 and 4 rate cuts. Now, again, that's not a mortgage rate cut. That's the Fed funds rate cut. But it is an indication that we're sort of moving through some of the issues that we've had in the economy, things getting more certain, and being able to make adjustments there is what the Fed wants to do. The Fed certainly doesn't want things to sort of take off like they did several years back and kind of have this wildfire. They definitely don't want that. They definitely don't want it in housing. Housing is an enormous contributor to GDP in this country. And so they're going to kind of measure that and watch that. But if we look at this and say, okay, inflation has sort of hung out at a point a little bit higher than what the Fed would like to see. Unemployment remains steady. We think, or Wall Street thinks that the Fed will act 3 or 4 times this year. What does that then translate into? Updated forecast right here. You see from Fannie, from MBA, from National Association of Home Builders, from Wells Fargo. By the end of the year, somewhere and we've kind of said this range of 6.25 to 6.5. Even a month or two ago is maybe closer to 6.5. But this target hasn't moved a lot. And even kind of how I started off the call, looking at Mortgage News Daily, 6.9%, let's call it, coming down to maybe 6.25, 6.38. Right here, you see the average. I'll try to use my cursor here. The average by the end of the year. That's going to make it more affordable for some people to be able to step into the market. Now, not a tremendous amount, not a ton of people, coming off the sidelines, but a few more that can now afford to buy a home, or that say, now's the time we want to get in. I still think the number that would really set this market back, in the right trajectory would be if we dip our toes in the 5s, just psychologically, what people would think about that market and about mortgage rates, given that. But, I think there are things right now that we do know with inflation, with unemployment, with what Wall Street's saying about the Fed rate cuts, and ultimately what the projections are for these things. Our KCM research team does such a phenomenal job of staying on top. If you notice this, if you're using these slides right now, this is as of today. This is updated with everything as these sort of projections move and they sort of reforecast. going forward. But Lawrence Yun said this. He said a meaningful decline in mortgage rates would help both demand and supply. Demand by boosting affordability and supply by lessening the power of the mortgage rate lock-in effect. The number of people that have a great mortgage rate in this country is at its highest level. Over 80% of mortgages right now are below that 6% threshold. And good for them, right? Good for the homeowner that has that. But as rates start to come down, people put off a decision. Maybe they didn't move. Maybe their family's growing. Maybe they're downsizing. Whatever the case is, they will make those decisions. I think right now our job is to be the expert and bring the best information we can to those that we serve. Talk about the economy, and is the economy slowing down? What's the impact of tariffs and things like that? Those are still questions that need to be answered. But another perspective that I think was good, I'm glad that we have this in here. Lawrence Yun said this: even in an economic recession, home prices can still rise if mortgage rates decline. As mortgage rates decline, it brings more people in the market, and that ultimately is something that will keep upward pressure on prices. We've maintained, with the lack of inventory across the country, that will continue to keep upward pressure on prices as we go forward. So I think as we manage and sort of give advice in this volatile market, that is going to be a critical thing. And so hopefully this information allows you to do just that. My encouragement, my coaching to you would be to take these slides, use them in a listing presentation, use them in any presentation interaction that you have out there with folks. I do want to say one thing as we wrap up here. We're going to start to shift how we do and deliver this content through the deep dive. This will actually be the last Monday morning that we go live on the deep dive. All of this content will now be available through our monthly market report, which publishes on the 10th of every month. You can go in and grab the slides, and take all of this. Usually around 20 or 25 minutes, we produce the monthly market report. You can grab all of that. We will continue to go live and probably do it a couple of times a month on different platforms, but stay tuned into KCM. You'll be able to grab all of that. And then going to be doing some different types of content where we give you, maybe a topic like recession or like mortgage rates or inventory or prices, just like we do on the deep dive, and doing a little bit more directed content, maybe using one or two graphics to communicate that story. So stay tuned in for that. We started the deep dive, a little over, I think 5 years ago, when we were in the pandemic, and we said, hey, let's go live so that people have topics to talk about. When we started doing it, we're doing it several times a week, and then sort of went to once a week. It's been a phenomenal resource, I know, for so many people. That this content will still be available to you. It'll be in the monthly market report. We want you to grab that. If you have any questions, certainly you can reach out to our team. You can always send me an email on it, David@KeepingCurrentMatters. But we want you to have this information. So stay tuned for how we're going to deliver it. We will get that in your hands. As always, I want to encourage you, if you haven't done this, scan this QR code and be a part of the survey that we're doing with John Burns Consulting. They do a phenomenal job of saying, hey, what's happening out in the market? If you'll be a part of that, then your voice gets heard inside of it, and we'll certainly give that information back to you. You can use it. I'll wrap this way. We usually wrap the deep dive this way, or start it off this way, but it's a key piece to what we believe and what we know is that most agents out in the market right now know what's happening. I certainly think that's true. Good agents understand what's happening, but only great agents can explain what's happening. So my hope is, through everything we've talked about on the deep dive, and even today with mortgage rates, that you can explain, here's what Wall Street's thinking, here's what we know, here's what forecasts are, so that you can give the best advice to those that you serve so they can make a confident decision. As always, I like to tell folks, in our office here in Richmond, we have a wall that says, we believe every family should feel confident whether buying or selling a home, and that drives the work that we do. So hope you have a wonderful Monday. Thank you for joining the deep dive. Be on the lookout for this content in a couple of different places going forward, and I look forward to seeing you soon. Take care.